Forex Focus brought to you by IG. US dollar is crashing here today and over the last week or so. Here's why, and able to also make a case for what might bring about an even further US dollar crash. As you can see here, the US dollar ETF, UUP, is still net positive since the start of 2022, though it is down almost 10% from its highs in 2022 in about October, November, the fall of last year, and down 2.6% in just the last week. And those might not seem like big numbers, but in Forex, those are big numbers. Currencies not usually moving more than 5-10% in a given year. And just since the fall of last year, US dollar down 10% here, thereabout, as pound, euro, and Swiss franc really being the major currencies beating up on the dollar. We're starting to see Australian dollar reemerge and also get its punches in as well. But it's been those European major currencies. And we'll look at that Swiss franc a little bit more closely in just a second. But I want to dissect, what's going on here to kind of show you all, given this historical action that we've seen, what could happen if this continues, or if we reverse course. Probably no coincidence that today U.S. inflation printed the lowest since 2021. First time core inflation is printed below 5% in the last year, and we're seeing that as the U.S. dollar is collapsing, and that's because interest rates follow that inflation, and interest rates, as we'll see in a second here, a big part of what currencies are in demand. And here we have in red the inflation in the U.S. over the last year. You can see peaking in the fall of 2022, and no coincidence as I flash back. See the highs in the U.S. dollar in the same time frame. As inflation was peaking, interest rates in the U.S. were really spiking, and interest rates abroad were not spiking as high as quickly. And now, as we've flattened out in inflation, and now you see 4.9%, the first four-handle print in the last year, interest rates have leveled off and stopped rising, and are expected to rise less in the future now, and could even turn around in the next several months here, as the central bank, who hiked interest rates to defend against inflation, won't need to hike any longer if inflation's under control. And we're seeing this really play out. Here is the last year plus of action in US dollar versus the Swiss franc. Multi-year lows in this market, and you can see especially the last week or so of price action, just a huge decline in this US dollar, as all the gears are shifting in the economy, and inflation printing lower, meaning potentially lower interest rates in the US, meaning less demand for that US dollar over the Swiss franc or over the euro or over the pound, especially, that Eurozone and UK still showing higher inflation than 5%, which could translate to higher interest rates there. And you'll remember that if I'm holding, a long US dollar position and a short Swiss franc position in this pair, if I'm buying this falling knife, so to speak, I'm bringing in the U.S. interest rate overnight, and I am paying out the Swiss interest rate overnight. And so if U.S. interest rates are falling, less demand to hold that U.S. dollar as the long part of a Forex pair, as those dynamics work. And so everything's shifting here. Of course, this stuff can turn on a dime. We've seen inflation print lower and then bounce back a little bit. But the trend obviously being lower for the last several months, and the first four-handle print in the last year for core inflation, looking like the Fed might not need to hike interest rates any further, and might potentially lower them in the next 6 to 12 months. although those projections they were larger in March, April, not quite as big as they were then for potential rate cuts. But either way, you can see it here, the lessening of demand for US dollar. But that being said, the sentiment we're seeing among Forex traders is trying to pick up this falling US dollar, as 90% of IG clients with positions in dollar franc are long. So 9 out of 10 traders in that market long the US dollar, short the Swiss franc as traders in this market. And you could check for the other major pairs versus the euro and pound. But for this one, as you can see here, getting on the long side of that dollar, trying to play the price extreme to the upside, looking for a bounce back off of this multi-year low. But that's why the US dollar is currently crashing, is funny enough, a good thing for people in the US who are taking their US dollars and spending them in the US on goods and services. That is, inflation is dropping. But if you're looking to go abroad, or you're holding long USD in Forex pairs, dollar moving against you here, and the continuation of this crash would likely be inflation really drops off, gets down to the 2% target the central bank wants it at, and U.S. interest rates stop pricing in future rate hikes and start pricing in no action to potential rate cuts in the future. On the flip side, U.S. dollar bounces back if inflation, next time around prints 5% or 5.1%, or the Fed comes out and says, yeah, good to see 4.9%, but that's not that much lower than expected. And we're still looking at hiking 1 or 2 or a handful more times. That would be the case for US dollar moving higher. Either way, a bunch of volatility in US dollar markets currently crashing. We'll see where they go from here.